Okay students, so in the previous video we have talked about rules of assets and liabilities and real account. So today the rule which we will cover is nominal account. Nominal. Okay, now what is this nominal account? These accounts are related to income and expenditure. Okay, or gain or losses. Okay, these accounts are related to income and expenditure or gain or losses. So what are the examples? Wages account, salaries account, rent account, interest account, discount account, etc. Okay, so these are the accounts which we will cover under nominal account. Now these accounts are also known as temporary account. Okay, so the keyword here is temporary account, because these accounts are closed, okay, are closed at the end of every accounting year by transferring to trading or profit and loss account. Simple. What is a nominal account? Nominal accounts are related to income and expenditure or gain or losses. Okay, examples are wages, salaries, rent, interest, discount, etc. Now whenever you see this kind of accounts, you will have to remember that we will have to apply the rule of nominal account. Okay, now these accounts are known as temporary account. Why we call it temporary account? Because the balance of these accounts are transferred to trading and P&L account. At the year end, we will transfer the balance to trading or P&L account and we will close the nominal account. Okay, now let's solve some examples. Okay, examples. Sorry, before that let's write the rule. What is the rule of debit and credit? Rules is debit all expenses or losses. Okay, credit all income or gains. So this is the rule: debit all expenses, losses, credit all income and gains. Okay, now let's take an example. Example number 1: salaries paid rupees 10,000. Okay, now we have paid salaries rupees 10,000. Okay, now again we can here apply the rule of real account or nominal account. Okay, so what is the amount item of nominal account? Salaries. Now, and we have paid cash. Now this cash account relates to, cash account is a real account. Okay, and salaries account is a nominal account. Okay, so salary is an expense for us, right? Salary is an expense for us. We'll have to pay salaries. Okay, so this is basically an expense for us, right? This salary account is transferred to P&L account on the debit side, right? So what will be the journal entry? Journal entry will be salaries account debit. So we are paying the salary in cash, so cash is going out, debit what comes in, credit what goes out. Okay, to cash account 10,000. Simple. Being salaries paid. Okay, simple. Now when you prepare a profit and loss account, this salary used to go here to salaries account. This is an expense for you, debit all expenses. Okay, this is an expense for you, right? The next example is rent paid. Rent paid rupees 800. Okay, let's take this example. Rent paid rupees 800. Now again cash is going out, we are paying rent, and rent is an expense. Rent is a nominal account. I have told you, see, rent. nominal account. Now I'll tell you why you call it nominal account, okay, why we call it temporary account, okay. Rent paid rupees 800, okay. So cash is going out, we are paying now, cash is going out, so rent is a nominal account, this is nominal and this is real account, okay. So we can apply either concept, either we can apply the concept of nominal or you can apply the concept of real account. If you apply the concept of real account, what will be the journal entry? Debit all expenses losses. So rent is an expense for us, rent account debit to what? Cash is going out. If you apply the concept of real account, debit what comes in, credit what goes out. Or you can apply the concept of asset account. Asset is reducing, so cash account, okay. So there are lots of ways through which you can solve the question, okay. So what will be the journal entry? So what will be the narration? Being rent paid. Simple. Now let me tell you why do we call nominal account as temporary account. Nominal account is equal to temporary account. Temporary account, right? So let's take an example of rent, okay. Now you pay rent every month. You have a building, you have taken building on rent for carrying on your business. You used to pay rent every month, okay. So from Jan to December you will pay, say for example, 5,000 rupees per month, okay. So this 5,000 you will pay on January, okay. So wait, let me just write it. Jan, Feb, March, April, May, June, July, August, September, October, November, December, okay. So what you do, you pay 5,000 every month for rent, okay. Now see, what will be the journal entry for this rent paid, okay. On Jan you will say what? Rent account debit to cash account. If you pay through bank, if you pay online, we will say bank account, okay. And again on February you will pass an entry, rent account debit to what? Cash account. Now this journal entry you will pass till December, January to December, okay. Now when we prepare rent account, you know that rent is a nominal account. Debit, the rule is debit all expenses and losses, credit all income and gain, okay. So basically this rent is a loss for us, right? We are paying cash for the rent, so the entry it will come here as to cash, okay, 5,000. And again on February to cash 5,000, March to December to cash 5,000, okay. So this way you are paying 5,000 for 12 months. So you are paying 60,000 rent for the year, okay, January to December. Now see, why do we call it temporary account? Now this rent, say for example 50,000 each, okay, the total is 60,000, okay, let's say the total is 60,000. Now at the year end, this rent of 30,000 will be transferred to P&L account, 60,000. This is the reason why now when you make your P&L account, you will debit here to salaries 60,000. So this is the reason why we call it nominal account, because at the year end this account 36,000 will be closed by transferring to P&L account. Simple, okay. Now when you prepare your assets account, when you say for example you have a machinery account, okay. Now January you purchase a machinery to cash 1 lakh. Again you purchase a machinery on, say for example, November, 3 lakhs. Again on November you sell your machinery, a part of your machinery for 50,000, okay. Now why machinery is not a nominal account? Because we don't transfer the balance to any other account, okay. How will we write the balance of plant and machinery account? This is a real account, right? How do we write the balance of this account? We will write here by at the year end, okay. At year end December, how will you close the account? By balance what? CD, okay. So 2,50,000 will be the balance. See, this 3 lakh is the total. If you sell 50,000 amount of assets, then you are left with 2,50,000, right? So this is the balance of your machinery account. 2,50,000, sorry, 3 lakh. 3 lakh. Okay, now again on next year when you open your books of accounts on January, you will bring this balance CD down as to balance BD. See, 2,50,000. Asset will have debit balance, so the balance is on the debit side. Okay, so this is the reason why we call it real account. Okay, the balance of this real account is not transferred to any other account, but it is brought down to the same account when you open the books of account in the next year. Okay, I hope you have understood the difference between nominal and real account. Okay, now let's continue with the example. We had done how much? Example number 2. Now let's write the example number 3. Okay, example number 3. Now depreciation on furniture, okay, rupees 1,000. Now this is the depreciation on furniture. What will be the journal entry? See, depreciation simply means the value of our asset is reducing, right? Now when the balance of our asset is reducing, what will we do? What will be the journal entry? We will credit machinery account we will credit furniture account by 1,000. It is reducing by 1,000. And what will we debit? To depreciation account. Simple. Why depreciation? Because depreciation is nominal account. See, debit all expenses and losses. So 1,000 is reduction in the value of depreciation. So this means this is a loss for us, right? It is the value of our furniture is reduced by 1,000 rupees. Okay, now why do we call this depreciation nominal account? See, now this depreciation will be transferred to where? Profit and loss account. Debit to depreciation at year end. Okay, so for example, depreciation will be always provided on year end. Okay, so December. Now see, we had debited depreciation account. Now what we have done, we have credited depreciation account by 1,000. So debit and credit, the account is closed. There is no balance left. Okay, and the 1,000 difference of 1,000 is transferred to P&L account. Okay, now when you prepare your profit and loss account, what will happen? This depreciation will go to debit side, 1,000. Okay, debit, credit. Okay, so now see, if you prepare your depreciation account, okay, if you prepare your depreciation account, see, debit all expenses and losses, credit all income and gain. Okay, now see, depreciation is a loss for you, so we will debit to furniture account 1,000. Okay, now this account will not have any balance CD. Provision for depreciation will have balance CD. Okay, that's a different concept. Okay, we will not cover that right now. So this will not have any balance CD, but this will be transferred to by P&L account 1,000. Okay, see the journal entry we have passed. P&L account to depreciation account. So this account will be closed. See, this account is closed. There is no balance left. 1,000. There is no balance left anymore. 1,000 and 1,000. Done. So this is the reason why we call it nominal account. Okay. Now let's see another example. Example number 4. Outstanding salaries. Outstanding salaries, rupees 4,000. Now we have to provide for outstanding salaries, rupees 4,000. What was the journal entry? Salaries account debit to OS salaries account, 4,000. See, what has happened? Salary is a item of nominal account, debit all expenses and losses, and outstanding salary is a liability for us. So we have created liability and we have debited the expenses. Okay. 5th, paid office expenses, rupees 500. Okay, so what will be the journal entry? Can you tell me? You can write office expense account debit to cash. Cash is going out, 500. Okay, so what we have done, we have debited the loss, debit all expenses and losses. This is an expense, we have debited expenses, and cash is going out, so we have credited cash account. Okay, so this is simple nominal account. Okay, nominal account is very simple. So what is a nominal account? If I have to sum up, these accounts are related to income and expenditure. I have said income and expenditure or gain or losses. Okay, wages, salaries, rent, interest, discount, etc. will be item of nominal account. Okay, now these accounts are also known as temporary accounts because these accounts are closed at the end of every accounting year by transferring it to trading or P&L account. See, I have told you in this example that at the year end, the balance of this account, whatever total expenses, whatever total rent we have paid, it will be closed by transferring to P&L account. Okay, Now let's take one more example, okay, before we conclude. Rent received rupees 5,000. Now we have received rent, okay, received rent. Now rent we have received. Say for example, we have a building, okay, we have given this building on rent. Say for example, you are having a business and this is your building, okay, you are carrying on business at this top floor, and you have given this building on rent, this floor on rent, okay. So you can receive rent, right? This is other income. Now what will be the journal entry for this? You have received rent, okay. Rent is also a item of nominal account, right? And we have received 5,000 as cash, okay. So what will be the rule? Debit what comes in, what is coming in? Cash is coming in, okay. So cash account, debit 5,000. And rent account is a nominal account. What is the rule for rent account? Debit all expense losses, credit all income and gain. So we will credit rent account. Simple. What will be the narration? Being rent received. Simple as that, okay. Now in your profit and loss account, this is what? Debit all expenses and losses, credit all income and or gains, okay. Now rent is a gain for you, so where will the rent be posted? By what? Rent account in the credit side, because this is a gain. All the expenses will be written here, expenses, losses, and all the income and gain will be written here, okay. I hope this is clear. Now see, when you prepare rent account, okay, rent account, see, debit all expenses and losses, credit all income and gain. Now you have received rent, so it will be written this side by cash account. How much? What was the amount? 5,000. Now at year end you will transfer this to profit and loss account. To close your, when you close your books of account, you will transfer it to profit and loss account. See, rent received, okay. So this is how nominal account, item of nominal account is treated. There is another concept of loss and gain on sale, okay. Let's say loss on sale of machinery. Let's take a simple example. Sold machinery for rupees 5,000. Cost of which was rupees 6,000, okay. Forget about depreciation as of now, okay. Now see, we have sold machinery 5,000. What was the cost? 6,000. Now we have sold machinery for 5,000, but the cost of the machinery in our books was 6,000, okay. So how will we pass the journal entry? See, now when you have sold the machinery, you are receiving cash, you are getting in cash is coming in. So what will be the journal entry? Debit what comes in, okay. So cash is coming in, cash account, debit 5,000. Now you are selling machinery, your machinery is going out of the business, so machinery is an item of real account, okay. Debit what comes in, credit what goes out. So what is going out? Machinery is going out. Or you can apply the rule of asset account, okay. Whenever there is increase in asset, we will debit. Whenever there is decrease in asset, we will credit, okay, to machinery account. Now can I write 5,000 here? No, I cannot write 5,000 here, okay. I will have to write 6,000. Why? Because the book value, okay, if you see your balance sheet, okay, the value of this machinery in your balance sheet is 6,000 rupees. Now this entire machinery is sold, okay. The machinery is 6,000, so I cannot write 5,000. I have to take the book value. I have to see what's the book value in the balance sheet. Simple. I have to see what's the book value in the balance sheet, okay. Now what will be the difference of 1,000? Where will the difference of 1,000 go? This will be loss on sale of machinery. Simple. See, loss, I have said loss will also be part of nominal account. Debit all expenses and losses, credit all income and gain. So debit all expenses and losses. So this is a loss for us. So we have debited the loss amount 1,000, okay. Now at year end, what will be the journal entry? Say for example, you have sold this on January, okay. At year end, how will you reverse the entry? See, profit and loss account, debit 1,000 to loss on sale of machinery account, okay. So this is the nominal account. See, at year end, the nominal account will be closed by transferring it to P&L account. See, this was debit, now this is credit. It is closed and the difference is transferred to, the balance is transferred to profit and loss account. Simple. Now let's take another example. sold machinery for rupees 10,000, cost of which was how much? 12,000. Okay, now there is a profit. See, what is the cost of the machinery? Cost of the machinery is 12,000 and we have sold it for, wait, there cannot be profit now, this should be 8,000. Okay, cost of the machine was 8,000. See, what is the cost of the machine? 8,000. Okay, we have sold it for 10,000, so there is a profit. So how will we record this on entry? See, when we sell the machinery, cash is coming in, debit what comes in? Cash account debit, how much? 10,000. Machinery is going out, so we will credit machinery to machinery, how much? 8,000. You see, there is a difference of how much? 2,000. So this will be your profit on sale of machinery, 2,000. Simple. Now at year end, this will go to where? This will be reversed. Okay, so what will be the journal entry? See, this is credit, we'll have to debit. Okay, profit on sale of machinery 2,000 to profit and loss account 2,000. See, simple. This was credited, now we will transfer it to profit and loss account, so we will have to debit journal entry and we will transfer it to P&L account. Okay, now when you prepare your machinery account, when you prepare a profit and loss account, how will this entry show? How will this entry be shown? The loss which you have incurred here of 1,000 will be written here to loss on sale of machinery of how much? 1,000, and the profit will be written here by profit on sale of machinery, how much? 2,000. Simple. And if there is no item, what will be your net profit? Your net profit will be 1,000. Simple. Now this net profit will be transferred to balance sheet. Okay, this is completely different concept, we will cover it later on. Okay, now can I say that I can apply the concept of the rule of debit all expenses or losses, credit all income and gain in case of profit and loss account? Yes, because the balance of this net profit will be transferred to where? P&L balance sheet. Okay, so when you prepare your balance sheet, this is your liability side, you will have your capital, you will add net profit here. Okay, because this net profit belongs to the proprietor of the business, so his capital will be written in the outer column. Okay, so this is the concept of nominal account. I hope it is simple. Okay, so the more you solve, right, the more you apply the concept, the more you will have the clarity. Okay, it's very simple, you just have to practice. Okay, just practice it 3 to 4 times, you will be able to remember. Okay, and this nominal account, real account, the rule, you will be using it in each and every questions. Okay, so it's very important.